Hello traders, welcome to ChrisFX. Today I'm going to teach you what are liquidity grabs, how to identify liquidity grabs, and how to use them to your advantage in order to enter winning trades. You can identify liquidity grabs on any asset, so you can use this technique in forex as well. You can use it on indices or wherever else you please. I will show you some examples. The first example is going to be on Nasdaq. And when you see this dollar sign that I have right here, this is a liquidity grab. Now, how I go about liquidity grabs? Of course, I'm using them on all time frames. Usually I'm trading the 1 minute time frame within higher time frame zones or points of interest, we shall say, which are very important areas from which price might react. So first of all, how you can identify a grab of liquidity. When you see breaks of structures, still I am on the 4-hour time frame, such as this break of structure right here, you have to know until now that most people are going to see this order block right here, this area right here, as an area from which they are expecting to place buy orders. Hence, you understand instantly that more likely than not, below this area there is liquidity. Here you go and you identify your area of liquidity. Where else is there liquidity? In this occasion, because we're retracing towards the downside, we have just to note down the lows. What I want from you is to go ahead, place a horizontal line on your lows, and then go ahead and identify your fair value gaps on the 4-hour time frame, such as the gap between this candlestick right here and this candlestick right here. If you want to learn more about the fair value gaps, click on the top right of your screen right now and check out this video that I have made about fair value gaps. Now that you have done that, let's say now I will take you back in time, and of course these are all things that I'm not doing in retrospect, I saw in real time, and I also called trades here on my Telegram group. There you are now on the 15-minute time frame. You had drawn your areas from the 4-hour time frame, and here we can see that we tap into this fair value gap from the 4-hour time frame, while at the same time we're grabbing the liquidity below this area right here. We retrace impulsively on the 15-minute time frame, and look what we do now. I will take you forward. We grab liquidity one more time while we are still into the 4-hour time frame fair value gap. For the moment, I will delete this area because it is confusing. Let's see how price reacted here. Before I show you that though, I will show you that this concept of liquidity applies to every single time frame. So for my style of trading, I would already be on the 1 minute time frame, and as I showed on the fair value gap video, I would be placing my trade exactly right here or on this retracement right here, with a stop loss either here or below this area, and then I would be targeting highs from higher time frames. For example, this trade would have been something like that for the first target, which we know that was hit, of course. So liquidity also, as you can see here, applied on this time frame as well. You see how on the 1 minute time frame we grabbed liquidity, then we broke impulsively above this area, and I entered with this potential fair value gap formation. I will show you though another way to enter. Now from the 15-minute time frame, and this is something that has not played yet. Of course, we don't know if it's gonna play at all, but we do know a couple of things. We know that when liquidity is being grabbed in such an impulsive way, with a very impulsive break above the structure, above the area, now this new fair value gap from the 15-minute time frame, now I will delete the 4-hour time frame fair value gap. This one is extremely important for me because look how we grabbed the liquidity below these areas here actually, and below this final area, and then very impulsively we closed back into this area. You see that? Well, not only that, we did not retest this whole area. We went ahead, retested until here, and left this fair value gap on the 15-minute time frame. So when liquidity is being grabbed and then you see a very impulsive movement back into the areas from which liquidity was grabbed, then you can consider this fair value gap that is left behind as a very strong area, which more likely than not is going to give us a trade in the future. And I will show you what I mean now, because price, let's go to the current price action, which is right here, you can expect that price will react from this fair value gap that has been created now on the 15-minute time frame. Then, once price makes it back into this area, and when price makes it back into this area, you will scale down on the 1-minute time frame and you will check to see the exact same thing. So let's say that price has made it back into this 15-minute fair value gap. I am now on the 1-minute time frame. What you want to see again is the exact same thing. So a grab of liquidity, as you can see right here, a very impulsive break. We either enter here instantly or on the retracement to the fair value gap, and then you take it to the next area. So you can utilize this concept in the exact same way. Okay, here we grab liquidity and then we break impulsively above the area. This is what you would expect when price makes it back to this area. If you don't see an impulsive retracement now on the 1-minute time frame, as you saw on the 15-minute time frame from the 4-hour order block, then you don't enter a trade. It's as simple as that. Let's recap things now. We know that there is liquidity below these areas right here on the 4-hour time frame because people are looking to go long from this area or from this wick right here, which is an order block on its own. What you can do in this occasion, you can go ahead and place a straight line which represents the liquidity that is standing below your lows. Then under these lows, find a 4-hour fair value gap. In this occasion, we have this one plus this one from here to here, so you can highlight this whole area. And once price makes it back into this area, scale down to the 15-minute time frame and look for the exact same thing. People are looking now to go long here. Place a horizontal line exactly on the lows and wait for it to grab the liquidity below it. Then of course you have to wait for an impulsive change of character. In this occasion this is not impulsive enough, so we know there is more liquidity to be grabbed. Compare now the change of character that happened here and this impulsive price action to this price action right here. When you see this impulsive break of structure on the 15-minute time frame, go ahead now on the 15-minute time frame and highlight your fair value gap which has been left behind after those grabs of liquidity. And now all you can do and all you have to do is wait for price to retrace at this specific point. If price does that now, we will scale down to the 1-minute time frame and there is a very high probability that we are gonna be given a very nice trade on the 1-minute time frame with the exact same logic. Now we will wait for a grab of liquidity, for an impulsive change of character, and we will take this trade to the moon. Of course, if you want to perfect your trading once and for all, and if you want to have me as your mentor, go ahead and become a part of the ChrisFX Academy by clicking on the link down in the description. Or if you want to check out my Signal service, then again by clicking on the same link you can choose between either my courses or my Signal service. There is nothing similar in the market, you are not gonna regret it, and you are gonna learn things that you are gonna keep for a lifetime. Be sure that you smash the like button for me and leave any comment you want or any question that you want, and I will make sure that I'm gonna answer it. This is gonna do it for today, traders, and thank you all for watching. Until next time.